It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking property news. We do that, of course, every day of the week, 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Into a Tuesday morning, August the 19th, and talking of speaking to experts, that's exactly where we're going in just a moment. Don't forget, of course, if you'd like to send through any questions or suggestions, you can do that with our email address, which is myrealestatepodcast@gmail.com. Now, you might have missed this on Friday. We have been talking quite a lot about the rate cut. Everybody is just hanging out for a rate cut on their mortgage. The RBA governor, though, she has flagged that it is unlikely to fall anytime soon.
But it's premature to be thinking about rate cuts. Inflation is still too high, and in underlying terms, it isn't expected to be back in the top of the band until the end of next year. Circumstances may change, of course, and the outlook remains uncertain. But based on what the board knows at present, it doesn't expect it'll be in a position to cut rates in the near term.
So we shouldn't probably get too excited for any rate cuts between now and the end of the year. That is kind of looking probably after Q1 of 2025. Talking of the experts, let's once again catch up with Nicola Powell, the Domain Chief of Research and Economics. And a very good morning. Welcome back to the Real Estate Breakfast, Nicola. First off, I want to sort of talk about the price growth that is at the moment slightly slowing down.
It certainly is, and I think that would be very welcomed news by many Australians trying to break into the housing market. I think, we have seen, a full recovery of Australia's property prices. We've seen house prices increase for the sixth consecutive quarter in a row, units for the fifth consecutive quarter in a row, and this is for across the combined capitals. So it does mean we do have record pricing for houses and units across the combined capitals. But I think the key difference here is price growth is decelerating, and that means prices are rising, but not rising as rapidly as what we had been recording. And interestingly, it has been a little bit more pronounced for unit prices. So, for example, unit prices across the combined capitals grew 4 times slower than the previous quarter, and it was the weakest quarterly outcome since early 2023. So I think, it does showcase that generally the slowdown is now on, the brakes are being applied in terms of price growth. And, when you look back over the last couple of years, the level of price growth that we've seen coming out of some of our markets is really unsustainable. And we think about, the damage to our hip pockets at the moment. I think all Australians are doing it tough financially.
Well, it gives us something to talk about, doesn't it? Because over the last 5 years, it's been an incredible seesaw of highs and lows. And boy, the troughs are obviously, you're monitoring all of this and thinking, gee whiz, did we get close on that call? Maybe not so much. Oh, we got it just about absolutely bang on with that call. So, sometimes we win, sometimes we lose, but, it's a constant trying to be right across all of this information, the shifting landscape, as we call it.
Absolutely. And we have to remember that there are diverse conditions. And the way I would describe Australia's housing market at the moment is multi-speed. And it's quite often you do see a multi-speed market, but we've certainly got some cities seeing a greater slowdown than others, and others that continue to buck the trend. I think, Sydney is one of those interesting ones where we saw house prices have risen $220,000 since the end of 2022. But we have seen a rapid slowdown now in price growth, and unit prices in Sydney, they actually fell over the quarter. And that is the first quarterly fall that we've seen for Sydney's unit market in a year and a half. So really showcases changed conditions are unravelling across some of our cities.
Yeah, and if you have a look at Canberra and Melbourne, they are, to your point, bucking the trend and moved into a recovery phase.
It does appear so. Canberra and Melbourne have been fascinating in terms of their market dynamics, and I would particularly say so for Melbourne. What you normally find is Melbourne and Sydney price cycles follow one another quite closely. They're correlated, but that hasn't been the case. Melbourne has pretty much underperformed relative to all other capital cities since 2020, so since the beginning of the pandemic. And it's really been an unusual kind of 18 months to 2 years where we did see prices fall in Melbourne. And then for the last 18 months, they've kind of gone sideways. They've really had seen no movement in price, which is, I cannot stress how unusual that is for a capital city and particularly for a city like Melbourne, to be performing in this really kind of stable way in terms of its pricing, which you tend to find really house prices in Melbourne either see quite substantial growth or they're declining. But it was interesting, as you said, over that recent quarter, we did see them increase 1.7% over the last 3 months. But that is the strongest quarterly gain that Melbourne house prices have experienced in 2.5 years, which really does place into context the subdued nature that we had seen across Melbourne house prices prior to this recent increase.
I recall a few weeks ago we were talking about to your point about the median Sydney price, hovering around that 1.6 million, and the amount of people that have decided, no, going to move out of Sydney, go to Melbourne, and I think it was somewhere around that $500,000 mark, the difference between the two median house prices. So people have sort of woken up to that fact. If they've done that in the last year or so, there's likely to be maybe a little bit of upward movement. They're winning at both ends of the spectrum.
Melbourne definitely has greater affordability. So, it's got a median house price of just over $1 million. And as you said, Sydney's at 1.66. So there is a vast difference. I think that affordability pool has definitely been there for Melbourne. I mean, it's got job opportunities also that match that of Sydney. That pool is definitely there. I do think it's interesting, though. I mean, Melbourne has seen taxation changes for land tax, and that has been specifically targeted towards investors. And this has been one that is going to be very interesting to watch the next 6 to 12 months. Because we did see, we've got house prices now rising, but unit prices are falling. And they've been falling now for about 6 months. And I do think that what we've got is a bit of a negative sentiment coming from investors. They're shying away from Victoria because of the higher costs of actually holding that investment property. And with the fact as well, Melbourne still hasn't got strong rates of capital growth, which we know investors chase, which means that investors are looking elsewhere. They're looking to markets like WA, Perth, even Brisbane, because holding costs are much lower. It's more affordable to purchase. And also they have got strong foundations for future capital growth.
We talk about the Canberras and the Melbournes, as you say, Perth and Brisbane. How many times have we talked on the positive side of the ledger over the last 12 to 18 months, 2 years? It's just continued to rise and rise and rise.
Absolutely. I mean, Perth, let's unpick Perth first of all. I mean, Perth is absolutely the crown of Australia's housing market at the moment. It has seen the strongest rates of growth. When you look at house prices in Perth, they're sitting at about $850,000. They grew by $448 per day, so every single day over the past year. And in dollar terms, that's the steepest rise a city has ever seen per day. Record high pricing. I do think there is an element, though, I always kind of say this point to just kind of place context. I do think the context is very important. We've got to remember Perth underperformed for many, many years compared to other cities. And I do think that it is playing a little bit of catch up. It's much more affordable than many other capital cities. And I think that affordability is helping to attract buyers also. It's more affordable, so therefore perhaps less sensitive to changes in the cash rate like a market like Sydney. And it's got really strong demographic trends, which means that there are lots of people moving to WA from overseas and interstate. That's also happening at a time where Perth has Australia's tightest capital city rental market. So all of these factors are kind of compounding into this continued rate of price growth.
Coming back to Brisbane, though, they're expected to reach the $1 million median price over the next 3 months, I think.
That is correct. So the median price at the moment is sitting just under $980,000. It is highly likely that as we are speaking, that median price is now tracking over that $1 million mark. And it's really interesting because house prices in Brisbane have also been the city that has bucked that overall slowing, so the deceleration of price growth. What we saw for house prices is they accelerated. We saw a greater rate of price growth this quarter compared to the last quarter, and also they're running hotter than this time last year. When you look at annual gains, they're almost at 17%, and that is at a 2-year high in terms of that annual change. It's only going to take another, about $24,000 to get that median price to $1 million. I think that what we're seeing at the moment is positive and strong population growth. We've also got lots of infrastructure spending, and that can leave a legacy and leave a mark on our housing landscape. And I think when you think about infrastructure spending, if any state or territory is going to actually deliver it, Southeast Queensland has to, because it has obviously that timestamp of the Games. So, I do think that we are seeing really strong conditions coming out of Brisbane, and it's likely to continue, to be honest.
Well, let's just finally just segue further north, and I just want to come back to the Affordable Capital Cities report that you released a little while ago now. And that is this area of, and I'm not sure if I'm pronouncing this right, Berrima in Darwin is the most affordable suburb with a median house price of $254,000. And it's followed by another suburb in Perth, which is sitting at $374,000. We're talking capital cities, not bad.
Yeah, look, it is. I mean, it showcases the diversity of the price points across our different capital cities. And we know that, Sydney and Melbourne are very popular cities to reside. I mean, Melbourne's still on track to surpass the population of the Greater Sydney area. But I do think when you look at other capital cities, affordability is much better. I think everything's relative, though, as well to the local average wage. Because when we look at, particularly areas like Tasmania and Hobart has one of the lower average wages compared to all of our capital cities. So I think everything is relative also to the localised market, and it's also about job opportunities. Why are people moving there? What's bringing them to the location? And they all factor into the price growth, but also the price point of a market.
And the good thing, of course, if you're thinking about moving to Darwin, quite a bit of infrastructure that is going on there right at the moment. Well, Nicola, great to catch up with you as always. Thanks for coming back onto the Real Estate Breakfast, and enjoy your Monday.
Thank you very much.
It's the Real Estate Podcast, talking properties from 6 a.m. every day, from every corner of the Australian real estate market.
And more so, probably not as many leaving. That's always been a battle for Toowoomba, is keeping your younger crowd, obviously, when they finish school and, want to look at universities and professionals and all that sort of stuff. We're not losing them anymore. They're sticking around.
So $200,000 at the moment in Cloncurry gets you a neat 3-bed, 1-bath house on a good size block. So 800 to 1,000 square metres is standard for us. $200,000 is not necessarily a, tear down job that needs to be fixed up. It's a neat home in Cloncurry.
They're often told by their hierarchy that we're not to touch these guys because their police forces will come after us. But they know that the Australian authorities won't go after them. So that's why Australia is seen as an easy target.
I've got a friend of mine who went nuts during the property market boom and leveraged against the other. And he ended up with more than 20 properties. So he's having to let some go.
We connect you to the best real estate information across Australia. The Real Estate Podcast.